Hello again, everybody. Doing here from DRFX Forex Swing Trading. Taking a look at the US Swiss franc. Here we can see that the pair has actually formed a large pennant consolidation over the last several months. The most recent movement within this pair came with a rally at the support with this sharp bullish candlestick formation here. This eventually took us just below the resistance boundary, and we have now started to see the market pull back with this fairly strong U-turn and this strong bearish candlestick formation. Now, many would have started to trade at the close of this candle here to start the breakout to head back to support. But one of the problems I had with this signal was the fact that, well, first of all, we hadn't actually hit the resistance point as yet. And second of all, this setup is not a very strong signal when we're talking about, well, either trading within consolidation or in other circumstances as well. Another aspect of it is the fact that we hadn't even broken a trend line either, which is generally a strong indicator that the market is headed towards the other side of the boundary. So in the absence of a trend line, the fact that we hadn't hit this resistance point as yet, and a fairly weak setup, a strong signal but a fairly weak setup, for those three reasons, this had a very low probability of actually leading to a breakout back to support. So I'm not surprised that we're actually seeing this sharp pullback that is almost about to take out this candle. We may still, in fact, see the market head to support, and this bull candle could actually be taken out by a series of bear candles. But the likelihood of that is very small compared to what we normally expect in terms of a strong setup and a strong signal to indicate that we should start trading to head towards the other side of the boundary. So this has a very low probability of actually leading to a successful trade and a successful movement back to the support point. It could still happen, but it may not be, it could do so with a volatile movement that would be difficult to trade. So again, with that in mind, there are two possibilities that we could actually see unfolding based on what we're seeing here. This could actually be the start of a formation of a trend line. If we see the market rally once more and take out this previous high here of 98.23, then it would have created this trend line. Thereafter, we could either see the market pull back once more and break this trend line to head to support, effectively creating a double top formation, or we could actually see the market take a bit of a pause here before forming a setup and then provide us with a breakout candle to start the breakout bullish above the resistance. So those are the two possibilities that I'm more in favor, that I'm more inclined to believe will take place. A rally that takes out this high and forms this trend line, followed by a U-turn and the formation of a double top formation that breaks the trend line and hits the support. Or a brief period in which the market moves sideways to form a setup, either in the form of a consolidation or a counter trend line, followed by a breakout candle that starts to break out from the consolidation. So those are the scenarios that I'm seeing that are likely to unfold based on the weakness of this setup despite this strong bearish candle.